Hello everyone, in this video I will be explaining you some of the basic price action rules and how I am investing in these stocks in my TFSA account in Canada. So whenever it comes to price action, you have to understand a few things, and that will be what I will be explaining throughout this video. So let us get started. So here you can see that I am using a trading view screen, and I am looking at the price chart of one of the Canadian stock in the Canadian market. So you can see here that this is a long time frame of that particular stock. So it's a monthly time frame, and I'm looking at a stock called as Camco Corporation. You can see that this is a really long time period for this particular stock, and this particular range is where the sideways movement since 2007 of that stock is happening. And right now, closer to 25, you can see that the stock was having a sideways movement for a long period of time, and suddenly the stock is moving to a higher range. So there might be some reasons depending upon the fundamental factors of the company, or that might be anything that is triggering finally the business is looking better and more people want to jump on to investing in this particular company. And that is one of the reasons why this stock became interesting to me, and I started looking at what is changing here. Ever since 21, the stock is finally in a bull run, right? And how to take entry in this stock and how to hold and how long should be your plan, that will be what I will be explaining you very shortly. So you can see that the long-term resistance of this stock, which was created in 2007, has finally been broken this year, right? Like this is the long-term resistance of that particular stock, and finally you can see that resistance point, which is over here, which is somewhere here, now it has started acting like a support. So whenever the previous resistance point has been taken out, and you can see that there has been a pullback in the last 3 months, but you can see that pullback is not sustaining, and the stock is currently using that as a support and trying to move up. So very important to note that I'm in the monthly time frame, and you can see that in the monthly time frame, this stock price, this particular price point, whatever this is, the people who are investing in this stock do not want the stock price to come down below this price point. So whenever there is an imbalance between the buyers and sellers, so if there is more people who are interested in buying in a particular stock, that is when this kind of movement happens. And actually, so you can see that right now the stock has again gone up So right now you can see that the stock has again gone up above the all-time high of that particular stock and closed above the all-time high range. So in the monthly time frame, the stock looks really bullish. So the trend, the few things you have to see, that the trend is bullish, and the price action closer to the nearer time frame is definitely looking bullish. So whenever the price started to go out of this range, which is here, which is the long-term resistance. So the first time it crossed with a lot of resistance, and that is why there was a pullback, but the pullback was not sustainable. So if the sellers are interested in bringing the price of the stock to a lower level, they will actually bring the level back to these levels, and again it will consolidate just like it was doing all these years, right? So whenever the people who are actually interested in bringing the stock price to the price range, because if they are not interested, they will not be investing in that company, and it will again come back to the normal price range. But suddenly what happened is that there is an imbalance, and you can see that the imbalance is sustaining towards the buyer side. So all these people who are invested at all these levels are seeing good level of profit, and right now people are not so much interested in selling the stock at these levels. This doesn't mean that nobody will sell this stock and the stock will keep going higher, but there is a probability that the stock will move more and more slide towards 100 plus levels, close to 120 levels easily in the next 3-4 years. This stock will move to that level. Maybe it will go a bit faster because of this momentum, but it might come back. And it might come back and cool off and stay here within the $100 range. So that is what I will be targeting for this particular stock. Again, whenever you're investing, you have to know that you will be wrong because you're following a price action, and price action is not 100% guaranteed that you will always make profit. So whenever you are investing based on price action, you have to understand that you will be wrong, and whenever you are wrong, you have to exit and you have to take a loss, because you're not doing a fundamental investing or a value investing, wherein which even if the stock price drops by 50%, you are actually believing in the company, you understand the business really well, and for that reason, even if the stock price drops, you're okay to buy more at those levels. But if you're looking at the chart, if you're looking at investing based on the price action or the momentum, you have to understand that if the momentum do not sustain, you will not be able to make money. And that is the most fundamental element of investing based on price action. So if I am to invest in this particular stock, I will be looking at these levels. So whenever there is a pullback, or if it open again flat and try to go higher, that will be a good entry point for me. And usually I place my stop loss below somewhere these levels. I will not put my stop loss immediately close to this level. I will place a little bit lower so that I have enough room to play with. So this is the second stock I am going to look at the price. So this particular stock is the other stock that I will be looking for the price action moment, that is Trinity Industries. This is also another stock. This one is listed in the US stock exchange. You can see here that it is the New York Stock Exchange, and I'm again looking at the monthly time frame. So TradingView is free. Anyone can go and look at for any of the price charts free over there. You can use a lifelong free membership and continue to get the price for analysis. But if you're more into trading and everything, you have to go for a subscription model. That will be expensive. But just for investing purpose, this tool is always free, and you can definitely look into that. So let us go back to the price action. This stock is also very similar to the previous one, except that in 2013 it has made a high, and right now after so many years the stock is going towards that price range, and you can see that the low is getting constantly shifted in the upward direction. So this is a good ascending triangle pattern that is forming in this particular stock. So there is a lot of upside that's possible again for this stock, but in the stock market there is nothing guaranteed. You have to understand that you have to manage your risk, you have to manage your money, how much of portion of your total investment you are making towards this particular stock. If you don't understand these two things, please continue watching my videos. I will be explaining all these in the future videos as well, how to plan your investment, how much amount of your capital you should be allocating for investing in each of these stocks. Because sometimes what happens is that you will be correct, you will be having confidence in that stock, that the stock price is going to go high, but a small downward movement in the stock will affect your psychology, and you will not be able to understand what to do in that case if your money management is not correct, which will in fact make your decision quality bad even when you are right, because a small amount of disturbance in your confidence will be a huge impact on your overall portfolio. So that is something you have to always keep in mind whenever you are doing value, or whenever you are doing momentum investing. So again, let us look back to this particular chart. So you can see that the stock price is slowly building up momentum in the higher time frame, and it has a resistance which it has created since 2013, 2019, 2023, and the stock is finally trying to break out of these levels. So whenever I'm investing in these stocks, so whatever price, I'll be interested if the stock price goes above 37, 38 range. That means again there is an imbalance between buyers and sellers. There are more buyers for some reason in this market, and people are interested in investing in this company. So that is something you have to understand, that all these people who have invested are believing in this company. If their money is not involved, or if the investment is not still there in this company, stock price should have come down to these levels, right? If the company is bad, these people who have invested, who are believing in the company, they will not be ready to keep their money waiting for all these years. And suddenly what you are doing is basically understanding this imbalance, and you're understanding that there is a lot of support in the bottom levels, that big investors are ready to invest. And suddenly when the price breaks out, and why the price breaks out, because the reason is quite simple. People are not ready to sell or short sell this particular company at that level, which means there is an imbalance between buyers and sellers. So nobody wants to sell at that particular level, so the price of the stock slowly starts going higher and higher. So whenever this consolidation happens and breakout, I will be investing in this stock whenever it is crossing $37, $38 levels, and my target will be quite big again, close to $70 at least. So that is how, and my stop loss will be somewhere here, which will be below this consolidation range. At least 50% of this consolidation range is a good way to have a stop loss. So anything below 25, 24 levels, that is when you have to exit this particular stock. So you understand that if you're investing in 38 and if your stop loss is 24, you have to understand that your stop loss will be $14. So $14 is what the risk you're willing to take. And if you're able to capitalize $38 plus 14, 8 plus 4, 2, 352 plus another 14, 76, 66. So if your target is above 66, you have a risk to reward of 1:2. That means if you're ready to lose $14, you have to at least make $28 against this particular stock to sustain in the stock market, because you're trying to combine probability, risk to reward, and money management at the same time. So keep in mind that all these things are calculated before you invest. So whenever you're ready to lose $14, that is the point when it's you should be comfortable investing in this particular stock. If you're not comfortable losing $14, don't invest in this stock. Let's say you're somebody who is capable of losing $140. That is your position size. That means you can buy 10 stocks of this company, because one stock is at a risk of $14, and now you're risking 10 times that risk, which is $140. So your target obviously will be $280, and that is how you have to do the money management. But I will explain more about money management and all those things, because nothing is guaranteed in the stock market. Tomorrow the stock itself can crash 50% without any reason. If there is anything bad happening to the company, can even go down like 70-75% or as well. So all these risk is already in the stock market. You have to understand that stock market is a risky game. It's always played with the edge of probability and money management. So more and more videos I will be explaining more all these topics. If you have enjoyed this video, please hit the like button. Thank you for watching.